What's up, y'all? What's up? Back at it, Mortgage Mondays. Welcome. Bring y'all something new to the rotation. What's up, Betha? What's up? Temperance. Here we go.
Hi, Aunt.
Temperance,
Hi, Crystal.
Hi.
Crystal.
Can you guys hear me?
We
Yes.
can hear you. We can.
Awesome.
Rob, Flip Funding. What's up, big homie? Crystal, Temperance. How are you, ladies?
I'm doing good.
Fantastic.
That's good. So I appreciate you guys jumping on. So Mortgage Monday is something that the Good Neighbor family is going to start bringing to you guys for November and December. That's going to be disciplined to make sure you guys are informed on what mortgage options you guys have to purchase your home, whether it's your first home buyer or whether it's your second or third home. But we're giving you our special mortgage specialist, who we basically send most of our clients to help us, get the financing. Did I leave anything out, Prince?
No, I think you've covered it for now.
Well, so for those who don't know Temperance, can you go ahead and introduce yourself?
Sure. I'm Temperance. I am one of the realtors on the Good Neighbor Real Estate team.
And Crystal, for those who don't know, can you introduce yourself, Crystal?
Absolutely. My name is Crystal Hong. I'm a loan officer with Cross Country Mortgage.
And what is it that you do, Crystal, when it comes
What is it that I do? So I help borrowers become homeowners. So, whether they're ready now to purchase a home or in the future, I can help game plan with them and get them ready for home ownership. So if it's down the line, we need to work on their credit, savings, whatever it may be, we can get a game plan intact just so we can get them to meet their goal when they're ready.
So clients who want to purchase a home, can you go into detail, like some of the things that they're going to need, or what should they be bringing to the table to say, hey, you're ready to make that phone call, to try and buy?
Absolutely. So, a pre-approval is good for anybody who's ready to either start looking or wants to know where they currently stand in order to purchase a home in the future. So we start by taking an application. The application is going to help us understand better, what your financial situation looks like. That goes for your employment, your assets, your income, all the good stuff. And then, once we have the application in place, we can review over what loan programs you qualify for. We can look at the credit a little bit more in depth. If there's anything that we need to help you with, whether it is to delete stuff off the application or the credit report, we can always work on those things to kind of see where you're at and what you need to do in order to bring up your scores. There are a lot of assistance programs out there that do have minimum FICO score requirements, so we want to help out, get you guys approved for whatever it is you can.
So Crystal, let's talk about like the first level of home ownership in order to be pre-approved. So like what does that look like in regards to the options for people who have like a 600, 620 credit score? What loan would be best for them?
So that would gear more towards the FHA loan, which is geared towards the first-time home buyers. For an FHA loan, we can go all the way down to 580 credit score. I never recommend that unless you have like certain circumstances that you need to go buy a home. But you're going to have a lot of overlays. You're going to have a lot of things that we're going to need a request from you in order to get it done. So if there's, again, I know a lot about credit, so I can definitely help with getting the credit scores up and kind of giving you a time frame on how long it's going to take you to get there. So FHA, the sweet spot's going to be the 620, 640s, where you want to be. Okay.
Temperance, did you have any questions?
No, not at the moment.
Okay. So Temperance, for you, dealing with first-time home buyers, like what are some of the things that you think would help first-time home buyers be prepared to go through that transition, you know, when they call you and say, hey, Temperance, I want to buy a house, but, you know, I want to do A, B, and C. Like, what do you, you know, feel like clients should have ready when they call you?
Well, first and foremost, you definitely want to know which neighborhood is of your interest. A lot of times when you're jumping from like one zip code to the next, it can make things a little confusing for you. So I think you need to target a specific zip code, so that way you're just not running all around the city.
Okay. So basically honing in on the neighborhood.
Yes.
Okay. So one of your, I'm not sure who this is, but Kayshawn 165 Temperance, she said, hey, Miss Temperance.
Yes. Hi, Keyshawn.
So Crystal, if we have a slightly stronger credit score, what loan options do we fit in if we can go above a 640 credit score? Like, is there another tier for people with a stronger credit score?
Yep. So the next tier would be the conventional loan. Conventional loans are amazing loan programs. We can get, it's either 3 to 5% down minimum. They're a little bit stronger in today's market. Conventional loans aren't as strict as FHA loans because FHA loans are government loans. So I like to call it the white glove for FHA. So they're checking every little thing there is to know when you're looking at the FHA. Conventional is a little bit more lenient with their rules and guidelines. But for conventional, you want to look at a 680 FICO score. Again, you want to be in around the 700s to get better pricing.
Okay. And with the conventional, do I need 20% down? Did you mention that?
No. So that's like the biggest misleading fact there is out there for conventional loans. Conventional loans, you only need 3 to 5% down minimum. 20% is when you're going to be avoiding the mortgage insurance. But mortgage insurance is on every loan. So if we can have a little bit of mortgage insurance on your loan until you get to 22% equity, it's going to fall off.
Nice. So you're telling me if I'm patient and I get that 680 credit score, I can go conventional 5% down and be a stronger buyer in a competitive market.
Correct. Mm-hmm.
Temperance, how do you feel about conventional buyers versus, you know, FHA buyers?
Well, in light of our the most recent market, it seems as though the conventional financing was definitely much more competitive when submitting offers. However, like I think Crystal said, you definitely have to put down a little more in comparison to FHA financing. But I know for sure with submitting offers, with the FHA financing versus the conventional financing, conventional definitely was much more competitive.
That's lovely. And then how are clients faring in this market? Is it still multiple offers, bid 20, 30 grand above asking price, Temperance, or what's the market doing right now?
Well, it seemed to me that it may have slowed down some. A lot of times it has to do with the time of the year, since we're at the time of the year because it's the holidays. Oftentimes there's not a lot of individuals searching at the moment, but there still is competition out there because the inventory is low. And so you definitely want to make sure that all your ducks are in a row so you can submit a strong offer.
And what would you say, like, average price point, 3-bedroom, 1.5 bath, like roughly what price point do you think I need to be prepared to, you know, to spend to get what I want for a 3-bedroom, 1.5 bath? Buying the city.
Depending on the neighborhood, I would say at least 225, 230.
Okay.
230,000.
For 220, 230, Chris, can you roughly give us FHA versus conventional, like what those numbers look like monthly down payment?
Oh, that one's rough. So,
No,
calculator.
just estimate it. It don't have to be precise.
Crystal just whipped out the calculator.
Put me on the spot, man. Oh my goodness. The calculator doesn't work. So it's easy math. So $225,000 purchase price, multiply that by 3.5%, and that's your down payment for FHA.
Wait,
If you're going
say,
conventional,
say that one more time.
so you said 225, right?
Yeah.
Yeah, 225.
Times 3.5%.
Okay, so that's roughly about $7,900.
There you go. That's your down payment. A lot of people forget closing costs. Don't forget closing costs when
So
you're thinking about doing
Yeah.
for a mortgage.
that's FHA you're saying, or conventional?
No, that's FHA, 3.5% down.
So roughly with closing costs, let's just say this 7,900 to turn into 10,000. Just estimate.
Say that again?
I said so. So right now you said without the closing costs, without the transfer tax, insurance, roughly just for the loan itself, 7,900. But if we're
Correct.
factor in some cushion, we're saying you should probably have like 10 grand to spend up to 225.
Correct. So for your down payment, you also want to factor in the home inspection. Home inspection is outside of the mortgage. What's the home inspection? Anywhere five to 1,000?
So home inspection is about 400. Then when you get the other bells and whistles with your home inspection, because we're always advocating our clients to do everything up front so that you spend the money now and save the money later. So we're doing a super scope inspection, termite inspection, possibly radon. I think that's all of them.
Okay.
Termite.
So yeah, if you're
So
if you're
roughly almost like $1,000 in inspections.
Mm-hmm.
Yep, so you want to include that with your down payment. And then also any repairs that have to come out of the inspection. You're going to be negotiating with the seller to see what they're going to repair. But if there's anything else that needs to be repaired, especially with the appraisal as well, you want to make sure you have a cushion on top of the down payment and closing costs.
So for
Yes.
those of you who just joined in, myself, Temperance, and Crystal, Good Neighbor Real Estate Family, Crystal just shared that FHA, you can go 3.5% down, but you can also go conventional with 3% or 5% down with a 680 credit score. That is a game changer. So if we go conventional at 225, Crystal, what are we looking at? 225 times 5%?
Yeah, 5%.
So we're roughly looking at about $11,250 to go conventional. So for an extra $4,000, you can go conventional and get a cheaper down payment, correct? I mean, a cheaper mortgage, monthly mortgage.
Yep, because the bigger the down payment, the more you're eating away at your principal and interest.
Nice. And then Crystal was saying, Temperance was letting us know that for the buyers out here trying to compete in this competitive market, if you can be a little more patient just to get your credit score up, and you can go conventional. Conventional is the way to go. Either conventional, VA, FHA if you have to, but we really prefer you to go conventional. What are the interest rates right now? That's a good question. Do you know what the interest rates right now are, Crystal? What have you been seeing?
Interest rates are hard to discuss. Interest rates are really based off of the loan program, down payment, and your FICO score. So they can really range anywhere between, so we're still at an all-time low compared to where we were 2 years ago. 2020, let's just mark that up as a weird year for everybody. So we're never going to see rates as low as they were in 2020, probably not for a while. But if we compare today's market compared to where they were in 2019, we're definitely a lot lower. So we're still in the threes right now currently for primary residences.
Nice. So I had somebody ask me a question the other day, Crystal. If I own a house, like I don't have any loans, but I own a house, am I still eligible to use one of the first-time home buyer programs? If I own a house currently. But
As an FHA?
No, say it again.
Like FHA?
FHA or the conventional 5%, yes.
Yeah. The only thing you can't do is for assistance programs, any grants out there, you cannot have owned a home in the last 3 years in order to be known as a first-time home buyer.
So what do you mean not owned a home? So like my grandmom gave me a house and I had this house for the last 10 years. I'm not eligible?
Not for a grant. Majority of grants. Yeah. You have to be a first-time home buyer.
So much, but you still can be a first-time home buyer. You just can't get the grants plus the first-time home buyer.
Correct. So
Okay.
for FHA, you just can't have two FHA mortgages at once.
Gotcha. All right. What was the other question? Oh, will FHA ever increase their limits for the loan amount?
They just did.
What did
Like
they
max loan amount?
say it again?
For max loan amount?
Yes.
They just increased the loan.
Well, Temperance, you still
Yeah.
there?
Yes, I'm still here.
Go ahead. Oh, you're back, Crystal. Say it one more time.
I'm new to this Instagram game.
It's all right.
Yeah, they just increased the loan limits, and I do not know them off the top of my head, and I should, for FHA and conventional.
Because I think you can go, before you couldn't go over 330,000, right?
Before, I think it was 365, so now it increased.
Okay. So another question just came in, Crystal. Can you do conventional 5% down for an investment property?
Negative. If you're doing an investment property, if it's a single family home, you can do minimum 15% down. If it's a multi-unit, it's got to be 25% down for investment properties.
Okay. And then what about for first-time home buyers that are doing like multi-family duplex or triplex? Can they still utilize 5% or FHA 3.5%?
You can do FHA 3.5% if you're going to do a multi-unit. You have to reside in one of the units for at least 1 year. Conventional, it's a minimum 15% down, even if you're residing in one unit.
If you're going conventional multifamily.
Right.
So, Crystal, what if an individual has one of the grants connected, as a first-time home buyer? Is it still a minimum of 1 year that they have to live in a residence, or is it longer?
So all grant programs and assistance programs have their own guidelines. So we're not just making sure you fit into the loan program itself. We have to make sure that you also fit into the guideline of the assistance program that you're eligible for. So we offer PHFA, PHFA K-FIT, that gives you 5% of the purchase price towards down payment and closing costs. So for their guidelines, it's a minimum FICO score of 660. Max debt to income ratio back end is 45%. And you have to reside in the property as your primary residence for 10 years for it to be fully forgiven. If you move out or refinance prior to the 10 or before the 10 years is up, then you just owe back the prorated amount.
Can you use the grant on multifamily too, or only on single family?
You can use it on duplexes.
So, okay, so I can go conventional, 5% down, receive the 5% down payment assistance, and I can buy anything from a single family to a duplex, 2 units, if I choose. Did I say that right?
Yeah. So you can't do a multi-unit conventional with 5% down. It can be an FHA. So, yeah, so that way I would lean you towards the FHA if you're doing that. Then it's the 3.5% down, and then the 5% of the purchase price that you're getting from PHFA you can use towards closing costs only. FHA, if you're using the PHFA, you have to put 3.5% down.
So to make sure I gotta say it out loud so I don't mess it up, right? So I'm going FHA with the grant. I could buy single family or a duplex. If I go conventional 5%, I could just get the grant though, the 5% towards my closing costs.
Yes, single family.
Single family conventional.
Mm-hmm.
I mean, that's not a bad situation.
No, and I would sell it too for people who are, leery about going with the PHFA because, you're stuck in a house for 10 years. By the time towards the end of the rate, how often do people buy houses? What is that, every 7 years?
Right, every 5 to 7.
Yeah, so you're just owing whatever's left of the loan. And chances are you're going to have enough equity in the house that you're not even really going to feel the difference once you pay that at closing.
Gotcha. Okay. So I'm not sure if everybody knows, but December 4th, we're going to be having an in-person home buyer event at 35th East Lancaster Avenue. The link is in my bio, and it's also on my story and in Temperance's story. We'll drop the flyer again when we get off of here. But if you guys have more questions, like I said, we're going to be doing this every Monday for the month of December and January. The goal is to basically help you guys get prepared for 2022. Yes, 2022 is approaching. We want to help you guys get ready for all your home ownership goals. So whether you're buying, like Crystal said, a single family, we got you covered. We just need to know where you need us to help fill those gaps. But again, December 4th, bring your friends, bring your kids. We don't care. Tell everybody. Bring the lady from the supermarket. We want to help you guys buy a house, and that's the goal for 2022. I think COVID showed a lot of us, like, we can't be dependent and relying on our landlords and not down payment, but rental assistance. Like, home ownership is fine. Even in the pandemic, home ownership still, saved the day for us. So, that's what we want to help you guys be prepared for. And, we want to, put some smiles on people's faces. Temperance, quick question for you.
Yes.
So what is the feeling or what is the feedback for a lot of your clients that have purchased a house this year?
Well, of course, at the end of the very complex transaction, they were happy. But it's just that, like, when you're purchasing a home, it's a lot that's involved. It requires a lot of discipline. Like, I wanted to say to Crystal, well, I wanted to ask Crystal rather.
You can ask. Go
yes,
ahead.
yes. So, Crystal, could you explain the importance of why you don't want to? So, when you have your savings account, why you don't want to put money in, or take money out while you are under contract and moving towards closing?
Great question. So once I speak with somebody and get them pre-approved, I kind of let them know what the next steps are when it comes to starting to look for a house. Everything you do from that point forward is going to be a factor in your loan. So if you are moving money from different accounts, this and that, if you have a large deposits in your account, if you have a lot of cash app deposits, things of that nature, we have to source everything. If we cannot source it, we cannot use it. We live in the day and age now where, a lot of people, we live in the world of convenience. So we want to make sure that we can source where the money's coming from. If it's coming from a paycheck, a bonus, child support, alimony, anything like that, we can easily source it. But if you have a side hustle going on and, you have a large deposit of $10,000 that goes into your account, we can't tell where that money came from unless you have receipts. So we need to make sure that if there's going to be deposits or anything of that nature, we can source it and use it. If not, we can try to figure out a workaround, whether it be gift funds or holding off a little bit longer, putting the initial deposit into your account and then letting it season before we proceed with the loan process.
So that ties into, like, just the discipline end, where when you become while you're going through the process of becoming a first-time home buyer, you really need to embrace what your realtor is telling you. We're not going to tell you anything that isn't correct. We just want to make sure that the transaction is as smooth as possible. And if you are following the suggestions and the opinions that the realtor is providing to you, then it will allow you to have a smooth transition. And then ultimately, you move smoother towards the closing table.
Okay. So Crystal, question came through. Are you able to do loans for people who are self-employed? And then, but Temperance, to finish what you were saying in regards to what has been the feedback from your clients once they've got the keys and they've got settled in? Are they been excited? Are they happy they went through the process? Was the pulling teeth in some of the hurdles with purchasing the home during the loan process, was it worth it?
You want me to go first?
Well, that was for you. Yeah.
Okay. Yeah. So pretty much, yes. I mean, like I said earlier, purchasing a home is, like, very complex. It requires a lot of discipline, and it's not always as easy as it appears. I've had a lot of buyers who will start off the process where they just want to like look at a whole bunch of homes and they think it's just going to be like this fun walk in the park, but it's really a lot of work. I also try to encourage first-time home buyers that you just have to stay the course, because oftentimes when we're submitting offers, and like I said, because the market was so competitive and it was so many individuals putting in an offer on a low amount of inventory, a lot of individuals would get discouraged. And I just would tell them to just keep pressing forward, just keep going out there, keep searching for homes. And, you know, we'll just keep submitting offers, and then ultimately we'll make it to the closing table. Especially with Crystal, you definitely want to make sure that you have a very competent lender as well as realtor, because there are going to be unforeseen situations that could surface. You want to make sure that you have someone that is knowledgeable and knows what's going on and know how to pivot, you know, whenever they need to, depending on whatever the situation may be.
Gotcha. So, but you would say that most of them still find the process being challenging, but it's worth it in the end.
Oh, absolutely. Because typically whenever someone decides that they want to purchase a home, they usually are going the long haul. So of course, once they're able to accomplish their goal, I mean, some individuals cry. I mean, it's just so many different emotions that happens once you get to that closing table and you're signing all those documents and you get your keys. It's just such a remarkable feeling. And I've noticed that on the faces of so many buyers that I've helped.
Right. It's definitely hard to describe. I think even in the process of battling for so many houses, the house that's for you is for you. It speaks to you. You can feel it in your stomach. It's a weird feeling, but you know it's for you. You know, most of the time the stars will align. Even if it's the house that you lost the offer on and you thought like, yo, that was my house. Like there's probably something better coming your way. Like Temperance said, you got to get down and just be disciplined to keep. But the reward at the end of it is just crazy, especially like I just one of our clients that bought a house with me and Leah. And the excitement he shown to after being in the house compared, like he couldn't believe it, like when it was first happening. But now that he's in it and his family's moved in, he's watching his kids play in the yard, he's got his man cave, like now the feeling has really hit him, and it's just like, dog, like this is what I dreamed of. Like I didn't know I was missing this kind of lifestyle until I got it, kind of thing. So, you know, so definitely get you guys, you know, some keys so that you guys can, you know, live the life you want and enjoy and be excited to come home at the end of the day. Because that's what it's about, creating peace. So rates are anywhere between 3.5% to 4.5% for primary residences. Justin, and conventional, you can do 3% or 5% down rate. That's definitely an option if you're out there looking to buy. You just need a 680 credit score. Crystal, so Leah had mentioned, what about self-employed? Are there loans out there for people who are self-employed, or what do I need to be prepared to purchase a house if I am self-employed?
So self-employment, we need a 2-year history of self-employed income that is claimed on taxes. So we do need, you know, once I hear a borrower is self-employed, the first thing I'm going to need is the application, followed by 2 years of filed tax returns. Depending on what's on the tax returns, depending on what kind of self-employed income you have, that's what's really going to depend on what the next things I'm going to need from you. So
what if I make $200,000, but I write everything off and I only make $20,000?
Then you make $20,000. We have to follow whatever you claim to make to the IRS. So if you've only claimed $20,000, we have to take say that 2019 you made $20,000, 2020 you made $40,000. We combine both incomes to 60 and then divide that over a 20-month period to average it out.
Say that one more time, Crystal. You got to say it slower.
Sorry. So if you have, again, we need a 2-year history. We need a 2-year average. So in 2019, if you only claim 20,000, and in 2020 you claim 40,000, then we would combine it for 60,000 and then divide that over 24 months, and that's what your monthly income is. So now's the time, if you're self-employed, to try to get pre-approved, give me your tax returns, and then I can tell you exactly what you need to claim for your 2021 taxes in order to get whatever purchase price you're looking or hoping for.
So, question, what if I'm a person that I have a lot of cash, but I don't claim a lot of my income? So I got 100 grand in the bank account, but I'm only claiming 20,000 in earned income for the year.
We still have to base it off of the income that you claim, and then you can just put a large down payment on the home. We do have bank statement loans and some out of the box loan programs that we broker out. You know, I would get more into that with particular people depending on what their situations are and kind of, again, what their income looks like and what they're trying to do.
Gotcha. So when it comes to the mortgages, you got to pay to play. Is either you're going to pay to get the house you don't want, or you're going to pay to get the house you do want, you know, and then after you get the house, we can go back to writing things off. Is it safe to say that? Can we say that?
I don't care what you do after the loan closes. I just want to know what's on the paper before me to get you pre-approved for the house.
Nice.
Well, see, that's a reason why it's vital to connect. Even if you're not at the place where you're ready to purchase, it's always vital to connect with a realtor. It's always vital to connect with a lender, because then they can guide you on what you need to do, instead of you just, like Crystal was saying, if you're, if you're writing everything, well, Aunt said it, you were writing everything off of your taxes, and then now you're prepared to purchase, it's just going to set you back. So it's always good to plan accordingly. So have these discussions with professionals that can give you the right direction on what you need to do.
That's a whole other conversation in itself. Don't talk to cousin Chris and Uncle John and them that bought a house 10 years ago. It is just 5 years ago. The home buying process is different. Yes. So please talk to somebody that is actively out here buying and closing deals. Mm-hmm. And it definitely helps if you're with a realtor that actually owns their own house. I'm not gonna say most realtors don't own their own house, but I'm gonna say the Good Neighbor team, we all own our own houses and investment property. So it's a lot easier to work with people that do it on the daily basis and have been in your shoes. So that's definitely a help you guys. So Temperance, did I leave anything out? Crystal, did I leave anything out? No?
I think we pretty much captured.
Did anybody else have any questions before we get out of here? So again, conventional is one of the better loans that are out right now. If you got a 680 credit score, you can do 5% down for owner occupant. If you're going to go looking for multifamily up to a duplex, you can do FHA and get the 5% grant assistance, right, Crystal?
Correct.
Get the grant assistance, we'll do FHA up to a duplex. But if not, go conventional and do the 5% down. Janae, 3 boys, no problem. We look forward to hearing from you. Don't forget December 4th, the home buyer coming up. Will a higher down payment help in your buying power? Great question, Crystal. Will a higher down payment help in your buying power?
I think it would. If you put yourself in the position of a seller, if you have if you have 2 offers on the table, one's FHA with only 3.5% down, then you have another buyer who's conventional with 20% down. That buyer is stronger because they have more assets. You're putting more skin in the game. You're putting a bigger down payment. You're probably putting down a higher earnest money deposit. So again, you're putting more skin in the game, which means you're probably going to be more qualified than the other borrower. Okay.
So it's good to have that as an option, but if you don't have to put all that money down, we're not putting all that money down. I need some.
Yeah, I never advise people to kind of clean out their accounts when buying a house. I think that's not a smart move for a lot of people. Once you're a homeowner, you're a homeowner. You can't go to a landlord and say, hey, something broke, I need it fixed. You got to do it yourself. So
you're the landlord.
Just fired your landlord when you bought a house.
So before we go to Temperance, question for you.
Mm-hmm.
For people who are looking to contact you, connect with you, how would I go about it? Well, before I ask you that question, Temperance, Temperance or Crystal, how would I go about buying an investment property with Tenants Already?
Oh, well, pretty much, I've had situations where individuals were looking for an investment property and there were tenants already in the property. Usually it's already described from the listing agent what's going on with the tenant, how much longer they're going to remain on the lease, if it's a month to month or 9 months down the line. So it's pretty much no different from purchasing a home that's vacant. Usually if tenants are in there, then you just get the specifics on, how much longer they'll be there.
So, Crystal, what kind of funding can you give for properties that are already tenant occupied?
So it's going to be the same for FHA. If you're purchasing it, obviously as your primary residence, you can use 75% of the rental income that you're receiving if it's already tenant occupied. Conventional, you need to have a history in order to use it. A history of rental income.
Okay.
Mhm.
All right. All right. Well, I think we covered. Wait, I see somebody else. Sorry. Will a good neighborhood show me houses? Oh, that's another good question. So, Temperance,
Yes.
will you show houses to a buyer who is not pre-approved?
Heck no. Because, honestly, we're wasting each other's time. By you looking at homes without knowing what type of monies you're working with is really wasting your time, because if you end up getting if you ultimately end up getting pre-approved and maybe the pre-approval amount is maybe much less than homes that you were already looking for, it can discourage you. It really can. Like if you're looking at homes that's maybe 250,000, but your pre-approval may only be 200,000, your mind is going to be set on that $250,000 home and amenities that are connected to that home. So it's always good, even though it may be nerve-wracking, to try to have that patience to wait until you get everything in order, get the pre-approval, and now you know how much money you're working with. It's the same as you're not going to just go to purchase a car without knowing how much money you can spend on the car. So,
Right. Crystal, can you just go over the grant one more time? We got a couple new people that just jumped in. The PHFA grant that's available.
Yeah, so PHFA is a state agency, so that's going to be available year-round. Most county grants are only available, they usually come out around March, and then it's whenever the funds are up, they're up. I know with COVID, a lot of the county grants have been suspended, and honestly, a lot of them haven't come back. I know that the Philly $10,000 grant I keep hearing about, people are taking classes. I don't know why it's still suspended. It's been suspended since August of 2020. So I guess maybe they're just lining people up for when it does become available. But the PHFA TAFET, that basically gives you 5% of the purchase price to use towards the down payment or closing costs. FHA, you still have to put your 3.5% down, so you can use that 5% towards the closing cost. Conventional, you can use it towards closing costs and down payment. Biggest stipulations to know for PHFA: minimum FICO score is 660. Max debt to income ratio is 45%. There is an income limit based on the county that you're buying in, and that is a household income limit. So any persons that is living in the house with you, we have to include their income if they're employed and over 18 years old.
So if need be, if my spouse isn't going to be a positive factor on a loan, I don't.
So she's a spouse, so they're gonna see on the application you're married. They're gonna want to know.
I said significant other, not spouse. I'm sorry, significant other.
You are signing a legal document stating who will be residing in the home with you within the first year. So that's what we're basing it off of. So
if they don't live with you for the first year, they can't move into the second year. You hear that? Did you hear that? So I'm sorry, honey. You can't move in with me.
But also, we're gonna have to question if you're married. We're gonna need to know why your spouse isn't moving in with you.
Significant other, not
significant other. Don't go get married if you're not married already.
So, fellas, we just found a loophole to pushing back that wedding date. We gotta buy a house first, and in order to get a grant assistance, babe, we can't be doing this at the same time.
Anthony, I think you need to chill before you have somebody scratching your eyeballs.
I'm just saying, we need a roof over our head first. That's what's most important. We can have the prettiest wedding after we get a roof over.
That was a good pivot.
I'm just saying. I want you to come home to nothing but the best in life, girl. I want you to come nothing.
Yeah. Anthony said it, not me.
But for now, girl, you go back to your mother's house. It's down payment assistance. You know, so now, but these are all good questions. We really, really appreciate it. But definitely, and even with that question about the pre-approval, man, I talk to a lot of clients that, like, because they buy things, you know, they have fairly decent credit, they think that they can just wake up tomorrow and get a mortgage. And you technically can, however, it's not as easy as you think, and you really want to be prepared. You don't want to be blind. So, you know, don't take it personal when we tell you, hey, I'm not showing you these houses unless you get a pre-approval. We're really doing this to protect you and also to protect our time, because we're trying to help so many clients and we can only be in so many places at once. So in order to provide a great service to you and the other clients that are out there, it's only right that you get your pre-approval so that we know what kind of buying power you have, and we can really help you navigate the waters easier. Because just say if you're pre-approved for 200,000 or 300,000, you might want to live in Drexel Hill, but your pre-approval is going to have you living in Upper Darby. Or you might want to live in, I don't know, the far northeast, but you could really be living in Montgomery County, but you don't know that until you get the pre-approval. So again, you know, put yourself in position to win and let us guide you, because that's why we're here. So, you know, again, we appreciate it. We will see you next Monday.
Yeah.
Can I take a loan of a bank in Philadelphia and buy a house in a different state? The question is, can I take a loan from a bank and buy a house in another state?
I think they're asking about the PHFA. So PHFA is for Pennsylvania purchases only.
Okay.
I think that's what the question was.
Okay. Yeah, I would talk to a financial consultant, Quant 1.1. I would talk to a financial consultant about that question. But if you're talking about the grant, it's in Pennsylvania, so yeah, you can use that grant. And that grant is available now. So for those of you, you don't gotta wait. There's not a whole bunch of loops and tricks you gotta do. Crystal, do they got to take a test or read something for the grant for PHFA?
Yeah, all grants you're going to have to do a home buying seminar. It's online though.
Crystal, I'm glad that Anthony brought that up. So when they do have to take the online home buying seminar, do they need to do that when the loan officer tells them, or should they do it beforehand?
It's after you're in process. So after you get under contract, then we'll send you the link for PHFA, and that's when you complete the home buying course.
Yes, you don't want to do it before. You want to do it.
Not PHFA. So again, all grant assistants are different. They have different criteria that you have to follow. For PHFA, you have to wait until you're under contract, and then we set you up the link. Gotcha.
Quant, send me a DM so I could try to help you navigate that question. So we're just not sure all over, but if it's about the grant, just in PA. If it's about something else, you know, you got to talk to that lender to see if, you know, if they're state to state specific or what the stipulations are. The name of the grant is Shoot Myself or Temperance a DM, and we will get you connected with Chris. We will work on the grant. We got you. So again, for those of you who are looking for more mortgage questions, want to learn about home buying, December 4th, the link is in my bio and in my story, in Temperance's story. We'll be in person with a small presentation to help you guys navigate these home buying questions and answers to set you guys up for success in 2022. So, you know, again, we appreciate you guys. We'll see you next Monday. Of course, I'll see you guys Thursday. I'll have a few interviews on Thursday night, this Thursday night with Temperance and Tone, talking about different things in real estate. So looking forward to that. And then, of course, we will see Crystal next Monday. Are you going to be joining us next Monday, Crystal?
I'll be here.
Yes.
We're gonna get the whiskey. I'll get the whiskey. You get the whiskey.
Don't you tease me. Don't you tease me.
Monday. I did the water tonight. Next Monday, so we could tell them all the good and the bad about buying a house.
The real deal.
Yeah, real deal Holyfield. Real deal Jameson. That's what we're gonna give them. But definitely appreciate you ladies. Look forward to it. Hopefully we get Marlon and Leah as well next week. Definitely stay tuned. Again, shoot us a DM, guys, if you got questions about buying a house. It's really not that complicated when you're working with the right team. It's the good neighbor way is the only way. So thank you guys, and we'll be talking to you.
All right. Good night.
Have a good one.
All right.
Hi, guys.